All right, thanks for tuning in to this coverage of Reliance Industries Q2 numbers review. And as the screen is telling you, the numbers are in line with estimates. The GRM slightly lower than what we were working with, but the bottom line and the top line exactly or almost in line with what the Bloomberg Quint estimates were. Still awaiting Geo numbers and they'll come in a bit. But Samit Sarkar, who tracks this very closely with me in the studios as well. Samit, initial thoughts?
So the numbers are pretty much in line. The GRMs have come in at $9.5 per barrel. The street expectations were close to $10 per barrel, and that this could be because of that shutdown that we had seen in one of their units. So that could have impacted the volumes and the gross refining margins of the company. And we also have the Reliance Geo numbers here. At least as of now, what we can see here is that the Geo's revenue have crossed 10,000 crore rupees, which is above what the expectations were. Expectations were close to 9,100 crore rupees. Also, the subscriber base for Reliance Jio has touched 25 crore, which is close to, which means that they have added close to 2.5 crore subscribers in the month of August and September.
I have the ARPU numbers. Samit, the ARPU during the quarter was 131.7. So I think this also
in line
more
with
in line with what we were estimating.
Analysts were expecting the number to be close to 132 rupees. So it's in line with what the analysts were expecting.
Okay, so while you hunt for the standout numbers, let's just get an initial perspective from Nitin Tiwari of Antique Stock Broking. He joins us right now on the phone line. Nitin, thanks so much for taking the time out. It seems to be in line with at least what we were estimating. How do these numbers stack up against your expectations?
Hi, good evening. The numbers actually are in line, as you rightly said. The refinery margins are also in line with my estimates of $9.5. So in general, the street estimates were also around these levels, only $9.5 to $10. They had a refinery shutdown, which has impacted the margins in this quarter, and plus the crack spreads in gasoline and diesel were also weaker on a sequential basis if we look at them. So all these factors combined were going to have an impact on the refinery margin. That was pretty much well known. I believe the petrochemicals would have done better, and that has been largely because of a weaker currency as well, which helps petrochemical earnings. So I believe that has to some extent offset the weaker refinery margin and helped us have a rather inline set of numbers and a flat number on a sequential basis also.
Hathway has come out with this announcement that they will be that Reliance Jio will be investing close to 2,940 crore rupees in the business in the business for.
By the way, Samit, so I just want to make a point out here that compared to the market capitalization of Hathway, which is 2,540 crores, this would mean that Reliance Industries would probably now have controlling stake, or Jio would have controlling stake, because the amount of money raised is higher than the current market cap of Hathway.
Yeah, yes, that could be actually, that was what Street was expecting, Reliance Jio to take a controlling stake in Hathway Cable, and that's what happened. So Nitin, do you think this investment for Reliance Industries was necessary at this point of time in Hathway Cable?
Let's look at it this way, that for Jio to expand quickly in the direct-to-home market, I believe as far as last mile connectivity is concerned, this could be of a lot of help. And in fact, the company would be in a better situation to explain their roadmap for these acquisitions, if at all. So, but in my as far as my sense goes, for the last mile connectivity to reach the homes where these networks are already connected, I mean, this could be a very logical and a very prudent step.
On the standalone segment, what's your view on the petrochemical segment? That has again been a standout quarter for Reliance Industries in the second quarter.
Yeah, so as I mentioned earlier as well, that petrochemicals have helped save the day, so to say, because depreciation in currency has helped us. The production has gone up, and with increased use of ethane in their crackers, the margins have also improved. So there are a number of factors which are contributing to better profitability in petrochemicals. Plus the demand in India, as far as petchem demand is concerned, that's also fairly healthy. So all these factors are contributing to a healthy petrochemical segment for the company.
Okay, Nitin, so just before we thank you, what would your verdict be on the back of these numbers? Prima facie, whatever you've seen, this is in line with estimates. Does it in any way impact the stock price of Reliance come Friday morning?
My sense is that, on operating levels, the numbers are healthy and should have a concomitant impact on stock as well. On the PAT level, again, the numbers are in line with estimates, so no negative surprises over there. Operationally, numbers look healthy and in line, so good set of numbers. More or less.
Okay, Nitin, we'll leave it at that. Thanks so much for taking the time out and joining us. Really appreciate your time. Well, Mahesh Uppal of Comfirst also joins us on the phone line. And just before we get into Mahesh, Samit, anything else that you've spotted?
Nothing so far. The numbers are completely in line. The interest cost has gone up for for Reliance Industries standalone business, but that was also on the expected line, so not a much increase there. So no surprises so far from the earnings that we are seeing for Reliance Industries.
Okay, I was looking at the exchange release for DEN Networks. If they too
they haven't
come out, but they haven't. Yeah, so DEN hasn't. It's just Hathway which has come out and given these numbers. So, okay, let's get in. As I said, Mahesh Uppal of Comfirst, he joins us right now on the phone line. Mahesh, this is all on expected lines. I mean, the GRMs, you could argue, may have slipped a little bit. ARPU is in line with estimates. Petchem has driven the profitability as well. ARPU is, okay, you can argue maybe a nudge lower than what we were working with. What do you make of these numbers?
Well, to be honest, I haven't studied the numbers very closely, but I think I'm able to comment on the Hathway takeover, which is, or acquiring a majority stake in that. I think that is a good move, and I think it's something that Jio would certainly benefit from, given its huge ambition in the fixed wireline space. And as you're aware, Hathway and many of the cable operators have a fair amount of fiber already deployed, and they also have last mile connectivity to a whole lot of cable TV users. Now, both of which are very, very synergistic with Reliance's plans, because, as you know, Reliance would want to derive much better value from their fixed assets and their wireline as well as wireless networks. And clearly, the kind of revenues you can get from simply the use of these networks for data services in a vanilla form, like you and I use phone calls or data internet access, that the scope of serious revenues from that is much less than what you would have if you are able to combine this with serious entertainment-related services. So I think if you're getting a share of the TV pie, if you're able to actually offer not just connectivity, data or voice connectivity, but also content, and you have access to customers, this is obviously a great thing for Jio.
Mahesh, they have not been able to, in a meaningful way, increase their customers, and therefore, this gives them, one, a direct access to all the set of customers on the broadband and both the aspects that both DEN and Hathway bring, because I think the release says 51% in Hathway or 52% in Hathway and about 66% in DEN. What do you think the stage ahead would be? Because I think the one thing that DEN and Hathway didn't have is capital. Now they have capital to grow further.
Sure. Absolutely. I think I would broadly agree with that, except to mention that we must not be caught worrying too much about subscriber numbers. Now the game is more about data usage. So as long as usage is increasing and consequently revenues are increasing, Jio should be happy. It's in the good old days, we were much more concerned about market share in terms of number of subscribers, but now you would want a larger market share in terms of usage or revenues. And I think Jio is well poised for that.
So how do you see the cable industry as such changing because of this two acquisitions that Reliance Industries has done? And do you expect the DTH industry to come under pressure because of Reliance Industries now getting into cable business?
Well, the answer to that is a qualified yes. I do think that both the cable industry and DTH industries would, in fact, be under some level of pressure. However, for the cable guys, the challenge has been much more severe, and they've, as you know, struggled a fair bit. Now, as far as DTH is concerned, again, we are seeing a huge impact of Amazon and Netflix and Hotstar and various other options, which are internet related rather than DTH broadcast. So I think while it'll be premature to say that things are going to get very bad for DTH people, but the pressure is still quite significant.
Okay, Amayesh, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Just a couple of points that I just noticed in Reliance Jio Industries. Now, the EBITDA has come down off. It's around 100 crore off what the analysts were expecting. Also, the margins are down by around 38. It's come to around 38.7%. It has remained stagnant compared to the last quarter when it was expected to increase. Now, that could be because of the lower subscribers that they're getting from the Jio phone users, because of which the EBITDA and EBITDA margins have come off a bit than the expectations. Also, the net profit is 50 crores, not below than what the analyst expectations. It has come at around 681 crore rupees, while the analysts were expecting the number to be close to 743 crore rupees. So strong subscriber additions have helped Jio to increase their revenues, but on the EBITDA front and on the net profit front, the numbers are not that impressive. At least are notch below than what analysts were expecting for Reliance Jio.
I was trying to see what the retail business is doing as well. The expectations were, I believe, Sumit, of about a 7% quarter-on-quarter growth with stable EBIT margins as well. But considering what Avenue Supermarts has gone through in the quarter gone by, one was expecting that maybe there's some pressure on there on the retail business. We'll just get that out as well. Okay, I do have some numbers with me.
But the retail business looks very fine, but the EBIT margins have come off for the retail business, has come down by around 30 basis points to around 3.8%. But revenues have increased again. It has increased to 32,000.
Which went up for Avenue Supermarts as well. The revenue numbers were okay, but the EBIT margins were under pressure for
because
them.
of discounts that they have been giving. So that's what has impacted Reliance Industries retail business also. But I'm talking about the Q-on-Q EBIT margins. If you see, that have come down to around 3.8% from 4.1%. But year on year, the business has again grown for Reliance Industries in this quarter also compared to last.
Well, so that's looking okay as well. The other bit would be the downtick in GRMs, now while largely anticipated, maybe slightly lower than what the Bloomberg Quint estimates were as well. Not a cause for disappointment, I would presume, Sumit.
It could be a cause for disappointment because they have been
it's in line with a few other analysts as well. So
yeah, it is in line with few analysts, but then in the past, if you see, they have been continuously beating the street estimates, and 9.5 GRMs at a time when the Asian benchmark, that is Singapore gross refining margins, that have been stable at around 6.1. This contracts your premium to the benchmark. So that has also come off because of lower gross refining margins. So we'll have to see what the CFO and what the company says on that. So let's see.
Yeah, I think we'll hear from them in just moments from now. Let's also make viewers read out what I think Reliance Industries and Mukesh Ambani has to say with regards to this stake buy in Hathway and Den, saying that we are glad to join hands with Sri Rajan Raheja and Sameer Manchanda, two of the pioneers in the MSO industry. Our investments in Den and Hathway create a win-win outcome for the LCOs, customers, content producers, and the entire ecosystem. This is Mukesh Ambani, Chairman and MD of Reliance Industries, speaking about the stake purchase in Den and Hathway. Remember, while we are talking about that, because that's new news, because the results per se of Reliance Industries are pretty much in line with what we were working with. But I'm told Sanjay Kapoor, former CEO for India and South Asia at Bharti Airtel, also joins us on the phone line. Sanjay, so good having you. Thanks so much for joining in. While widely anticipated, do you think this formal announcement and how they are going about with 51% or 52% in Hathway and 66% in Den alters the landscape meaningfully?
Yeah, I think, very clearly, we've seen that world over when wireless grows, wired grows as well, and even faster in many countries. And therefore, fixed line and fiber should be a quintessential strategy for Jio going forward after their 4G success. And I think to consolidate markets like India, where cable operators own a very fragmented market on fixed line services, is probably a very natural move. Even in countries like USA, we've seen operators trying to consolidate with the so-called cable operators. So I think cable operators who own a very fragmented market in India, and both Hathway and Dell have played a role in trying to consolidate some of that, and probably Jio is playing a master consolidator. So I think it's a very natural strategy, and the next move, where they'll probably consolidate their position further in the data and data services market in India.
So this move, do you expect this to bring more pressure on the ARPUs for the DTH players?
Yes, I mean, eventually from access to digital services and content will be a natural movement. And the world over, we are seeing that the traction that some of the content players, including Netflix and Amazon Prime, are creating. So, of course, it will have some impact on, the change in behavior of consumers with better access and bundled content and digital services. Obviously, over a longer term period, the behavior patterns, especially amongst the younger generation, will move from traditional DTH and television onto these newer content services.
For private operators like Airtel and for Tata Sky, that matter, so you're expecting more pressures to come on the ARPU. So, and what about the broadband segment for Airtel? How do you see that? Do you expect that segment also to be impacted?
Look, very categorically, the world over, the form factor of the content is changing. What was standard definition on video has become high definition. What is high definition is bound to become 4K. And to consume that degree of content on wireless networks is not sustainable, according to me, in the long run. And therefore, the wired networks have to support the consumption of this new form factor. And therefore, a lot of load when it comes to homes on digital consumption of video will be shared by fiber and digital services at home. This is a very natural evolution. And there are networks in India which are still copper-based, and they'll get challenged very clearly. And revenues that come for both BSNL, Airtel, from these services at home will be challenged with 1 gig lines that Jio has been talking about. And that's a whole new experience for customers going forward. So undoubtedly that will get challenged.
Sanjay, just one last question. The growth rates for the two companies which have been bought in the last few months, if not really years, but months, haven't been the greatest. Reliance has bought the market share. It's almost paid for sales right now. Do you believe this formidable combination, and not a monopoly of sorts, but a behemoth that exists, that now gets created, will garner more market share at a rapid pace? Do you think that's a possibility?
Laying down fiber, and we have to keep in mind that fiber is non-fungible. It's gotten for a particular customer, and if that customer chooses not to use that fiber, then I can't reallocate that fiber, unlike wireless, to somebody else. And I think Reliance realizes that very clearly. And to lay so much fiber in the country and provide access to so many customers is going to take time. So I think Jio, by this, is trying to shorten their reach to the market, and probably with their plans in place, their fully capitalized business model, they'll be able to accelerate the consumer experience and reach by virtue of going inorganic in this market. So I think inorganic to reach fiber to the type of homes and cities that they want to reach to has to be accelerated, and clearly organic will take a very long time, and therefore inorganic strategy becomes a part of any such player who has such a large ambition.
Okay, Sanjay Kapoor, really appreciate your time and thanks for joining in today.
Thank you.
That's Sanjay Kapoor with his thoughts. So 2 pieces of information or 3 pieces of information. Business by and large okay. ARPUs for Reliance Jio have come off, and Reliance Industries or LGO has announced buying of additional shares, which gives them a stake of 51% and 66% respectively in DEN Networks as well as Hathway Cable. So 3 big pieces of news that have come out with this release from Reliance Industries. The numbers in line with estimates. Don't expect the stock to have a material reaction come Monday morning. Thanks so much for watching this broadcast.